Hello and welcome to another update video about GALA. We want to talk about the updated GALA situation here because GALA invalidated one of our two possible bullish wave counts here. So there are two that we talked about. The more imminent one has now officially been invalidated, became already quite unlikely, as you know, in the last few days when price broke below the 78.6 retracement. That was the warning that the imminent count is not going to play out. That's why I like Elliott waves so much, because it gives us these clear objective price levels where we say, right, if that level is broken, it's most likely not going to play out. So that was 3.34 cents. Since then, since we had that break, prices dropped another roughly 10%. So it was certainly a good warning that this particular imminent count is not going to work out. Remember also that we said on this way down, at no point we had a confirmation that a low was in. Yeah. So what we needed to see to get a first indication a low was made would have been a move above 4.2 cents to cut out that swing high. Never happened. So I will take this support range out now because the bulls had plenty of chance to show us that they plan to turn around there. They didn't. So that just leaves us with one more bullish wave count left. That means on the one hand that I'm getting more concerned about new bear market lows because, you know, if you have two bullish scenarios and one is invalidated, it leaves you only with one. And while that doesn't mean it will break, it means that certainly there's now less of a buffer between price now and the relevant Fibonacci support for a bullish turnaround than it was before. Okay, so what I'm going to do, I'm going to take out this idea that price had a chance to rally from here in a 5-wave move. Yeah, I'm going to take that out. It still can rally, but not from there anymore. Not in this particular wave count. So as you can see with this swing low here, or let me just take out the count at all and then we can just build it from scratch to show you the alternative or the second count that we had, the second bullish count that we talked about. We also want to dive into the subwave structures here. So yeah, we talked about if 3.34 cent breaks, there is one more bullish case left. That leaves us with support in this region. So I'm going to move that across because this is now the relevant support range. What I'm going to do though, because we already broke below the golden ratio, I'm going to take the 50% fib level off, otherwise it's just yellow on the screen, so we don't need that. And the 78.6 retracement is the key level where we really need to turn around now. If we don't do that, it will open the door to new bear market lows. Yeah, it will open the door wider. Again, what I have to say is that if we look at this as a correction, which I'm currently doing, yes, it is not going to be invalidated until we really break below that December low. Yeah, so a so-called 1-2 setup can still work out. The problem is that below the 78.6 retracement, which is at 2.5 cents, this will get much less likely. So the alternative bullish count, or the, well, now primary bullish count, is this, that we are holding support, or that we have a chance to hold support here at 2.5 cents. The problem is if we don't, again, probabilities will increase for a more direct path to new lows, okay? In fact, that would then become primary. So also here, Elliott gives us very clear levels that we need to be watching. So this is now the count. Wave 1 to the upside and then A, B, C down in a clear 3-wave move. So how do we count that? I would count that as a 3-wave move, so it has to be a wave W. It could be an A wave, but it can't be an A wave because the move up here, yeah, the move up here was very clearly, let me actually think, W, X, Y, yeah. The move up here was not strong enough. If this was an A wave, the B wave would have needed to retrace much more, which it didn't. So it can be a WXY. Means that we're now possibly in the Y wave. And in the Y, yeah, based on this structure, we had an impulse down. So we look at that as an A wave. Look at the move up in a 3-wave move as a B. And the move now in a C. That's sort of the structure that we talked about before in case we break the 3.34 cent level, which we did. So zooming in now, Yeah, within the B you have a very nice ABC in itself, or even WXY. Yeah, that works out. And then we are now in the C wave. And most people are interested now where that C wave can go, where the Y wave will go. So let's establish some targets. First target is take the length of the wave W, we take the high of the X wave. And this is already a reason for concern, yeah, because it points to the 1.89 cent level. I'm going to mark that on the chart. This is not great if we get there, because it will reduce the likelihood of turning around. But the 1-to-1 ratio is a very common target for a W and Y projection. The very first one, which is sort of less common, is the 61.8 extension, but we broke that now. That was at 3.12 cents. So that leaves us just basically with one viable target, which is actually below our support range. Again, it would not be invalidation if we get to that level, but it means that below, obviously below the 2.56 cent level, it just reduces likelihood of still being able to turn around. Yeah? Okay, so then we've got the other way of measuring, and we can take the length of the A wave, we go to the high of the B wave, and there we get, again here, the 1-to-1 ratio, also broken, and the only other one which is left is basically at 2.5 cents. So there's a bit of confluence there with a 1.618 extension, which is a typical target for a C wave, and the 78.6 retracement. So there's a bit of confluence there. And then, yeah, this is sort of where we are. And then let's zoom in. Let's see if we can establish a subway structure count for this move down, which is very difficult to count in my opinion. Yeah, it's very difficult to count because of the lack of volume, and it's very choppy. Probably best I could tell at the moment, if this is a C wave that we had here, a wave 1 down, 2, a bit of a flat pattern going on there, then another 1, 2. Well, certainly that we're still in the 3 most likely, because I haven't seen a healthy 4, even though wave 2 was very shallow as well. And then we can calculate the length of the third wave. Yeah, get a third wave target. It would also be typically the 1.618 extension, and that takes us down to 2.39. So what we see here is that likelihood is quite high. Yeah, and that would only be the third wave actually. So assuming we still are in the third, which seems likely. So what I'll do, I'll shift that all down based on that. What I'm also going to do, because most targets point towards the, well, below the 78.6 fib level, what I'm going to do, I'm going to highlight that in orange now, because that means higher risk. We've got these colors, right? That means higher risk. And I'm also going to do I'm going to add the 88.7 fib level. Now that's another retracement target. I typically don't like to show that because it means that if we go below the 78.6, typically probabilities shift rather to, okay, we have an impulse to the downside, right? But I'll still add it because some of these targets are below the 78.6 fib. Hope that makes sense. But yeah, this is really the last chance GALA has to turn around somewhere in this region to still protect the bullish case. I'm still leaning towards the upside. I have to say, I could be wrong, absolutely, but I'm still leaning towards the upside. And the reason is the Bitcoin Ethereum chart. Yeah. I mean, what could certainly happen is that just GALA is completely, let's say, losing out over Bitcoin, Ethereum, and against other altcoins, and it's going to be one of the few coins that's not going to hold support. Whereas ideally Bitcoin, Ethereum are, and many altcoins are ideally as well, because GALA has been underperforming really over the last few days, yeah, and that might all be related to that upgrade, people selling off, uncertainty and so on. But yeah, I mean, let's see. I mean, so far the move down is 3 waves. That's why I'm focusing on upside here still, because we had 5 up, right? We had 3 down, 3 up again. In that, well, 3 here actually as well, right? So in the X wave, and then A, B, C, and so the C wave is an impulse or ending diagonal, but ideally after this C wave it should be done. Yeah. So let's see. I mean, there's hope in a sense that even the Y wave. Let me think. Yeah, even the Y wave could unfold as a WXY. Yeah, and then we might already be done here sooner. We might not get the 5 waves done. Hope that makes sense. So if we say, okay, this was not an A wave, this was a W. The problem is this looks rather like a 5-wave move, but okay. That this was a W, this an X, and this a Y. And if this is also a Y wave, then this could have been an A wave, B wave, and the C wave is unfolding down. And we might end here somewhere instead of doing that last leg down. But let's see. I mean, that's why we've got that colored box on the chart to indicate where price can turn around with all probabilities. Doesn't look good for GALA, I have to say that, but there's still a chance for the bulls to show that they are there. Yeah. Okay, that's my update about GALA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.